Hi, my name is Melissa Gragg, and I'm a financial mediator with valuationmediation.com and also a founding member of the Divorce Allies. One of the things that we have noticed through trying to help women get divorced through the Divorce Allies is that couples will also want to work together with a mediator, and or one spouse could actually provide an offer to the other spouse. So in these types of situations, it's sort of like a different version of mediation where you're working with a couple and you're walking them through this financial property statement, which is also the beginnings of the financial disclosure that is typically required for each state. And you typically would hire an attorney to work through this first part, which is very financial based. So what we are offering or training mediators on understanding how to work a couple through the financial statement and to understand what pieces of the offer you may have to include other professionals. So again, we will show you through some of our proprietary spreadsheets, and you can then it will provide some information on how to walk through this process. So typically, either you work with us to go through the settlement disclosure and property statement, or you would work with a mediator that is facilitating through our mediator circle and other referral partners. So for the most part, we typically start with this property statement, which we'll show you in a minute, but we also give some guidance to the couple of how to start to fill it out. And again, this is a process that as a mediator, you could really start right here on your first mediation, and you could walk a couple through this process. And I'm going to kind of walk you through when we get to the statement or the property statement. I'm going to walk you through what I would normally do with a couple. So a lot of times we're asking them at the very beginning if they want to pull together all of the accounts that they have access to, either as of a recent date or to upload them into our secure portal. And so what we want them to start doing is entering and pulling together the list of property that they have, the amount or value that they feel it is worth, and or a statement that really dictates how much is in that account at this time. Typically, we're having them upload that statement. So we don't necessarily just want to rely upon everybody's word for the information. The financial information, if we rely upon one party to just provide us with information from that is verbal without any documentation or proof, you leave yourself susceptible to, basically believing people that may not actually be telling you the truth. And so the easiest way to verify the information without having it to be a truth or a lie is to just get the documentation and to have each person provide documentation for any of the issues. Typically, this documentation could be a mortgage statement, bank statements, statements for the investments, pension statements. So all of these actually issue out statements. You could also look on the Social Security Administration website and pull down your history of all the income from all the years. Both of you could provide this documentation. If both of you pulled together your credit statements or credit reports and provided them to each other. If you pulled together the credit cards, the 401ks, even your business tax returns and your personal tax returns. A rule of thumb could be, for the most part, to provide each other with like 12 or 24 months of statements. So the past 2 to 3 years probably makes sense. And it also depends on when you started this process. So if you started living separate and you're concerned about the spending on either party's side, then you might want to each provide each other with 2 to 3 years of documentation, which means every single month statement, you can go on your bank and you can download that information in Excel if possible, or download the statements and then upload them to the portal so that everybody has access. The whole point of uploading the files is that you don't have to look at them. The mediator or the financial professional will pull the documents and then insert those numbers into the spreadsheets. But if you are concerned about it, you would want to review those statements for the areas that you have concern. This could also mean pulling together K-1s, payroll statements, agreements, pension statements, anything that you think is going to be relevant for your particular situation. A lot of times we'll need additional documentation for the business valuation, but we can talk about that in another presentation. If the date of divorce for your state is the date of separation, then this becomes kind of the issue of, do you agree to the date of separation? And so then that's kind of a more simplified way of looking at the property split, because everything is going to happen as of that date. A lot of states will just have the valuation date, or the date that you have to value these pieces of property would be closer to the trial date, which is always kind of a moving date. It could be moved in the future. So you're constantly updating these statements. So that's why we just upload them to the portal, and each month you just upload the statement that you have control over. When we look at the whole property statement, we're really walking through each of the line items. And I will have to say, one of the things that we have noticed is if you really just negotiate each item as its own piece. So when you're talking about the house, everybody is saying, okay, we have a house at this address. And there are other pieces on this spreadsheet that sometimes people can use, but it not for this particular presentation. A lot of times they're pulling together the account number, and this is going to be important when you put together your divorce decree. You're going to want to identify every single thing, like the cars will maybe need VIN numbers, the deeds, the titles. All of that documentation is going to eventually be needed for your divorce decree. So this will also give the statement date. If it's not exactly the date of separation, then you want to just list what that statement is. Or if you're constantly updating it, then this will be the most recent statement. If there's an alternative value, so that means that we're putting in one value, but there's actually a range, we might put that other value here. So I'm going to hide these for now, and we're just going to look at the actual property. So in this situation, if we're looking at like a marital house, both of the parties are going to come in kind of having an idea of what the value is. Typically, we're going to see that like the house is going to be a lot closer in value, maybe a $50,000 to $100,000 swing. Obviously, if you have a multi-million-dollar property, it could be a greater swing. So the reality is, if you have a house and one of you wants to keep it, typically we're going to at least want you to get some sort of appraisal or kind of a more official value, so that you're not just a he said, she said, or each spouse has a perception of the value. So in this particular case, we might start talking and one person says it's 250,000 and the other person says it's 300,000. So if you remember, I said that little area that we had the other value in. So we might put, right now we're going to work with the 250,000, but we might put that 300,000 as the other value. Again, it's sort of establishing a range of reasonable value. So we're going to go through that process. But again, I would say that for the most part, in negotiating these items, really when you're starting, coming to a rational idea of the value and not necessarily putting the onus on the parties to come up with that value. And so if they don't have an understanding of what the house is worth, then you can look on Zillow, you can look on Realtor, but the odds are is you're going to have to determine if you're going to keep it or not. If you're not going to keep the house, you probably don't need an appraisal. You just need to figure out the who, what, why, where, when. That means who's going to stay in the house, who's going to get the house ready for market, who is going to, be prepping and fixing it. How much money are we going to spend to get there? And then what realtor is going to go put the house on the market? And then what date, right? It could take 3 months to get the house ready. And that's why I'm saying that you could be working through all of these other issues while you're putting the house on the market, or you're waiting for that cooling off period. You can even start to separate assets if you determine some sort of settlement, and then it's a date of separation, right? So the date of separation, then we know what the values are, we determine what the split is, and we move forward. but I would negotiate each of the pieces of the puzzle instead of trying to negotiate the whole pie. So if you look at this, we might have $150,000 debt on this, which means each party would have about $50,000 worth of equity if we were to sell the house. Again, it doesn't quite matter what happens. I mean, if the house is worth 300,000, then obviously now each party has 75,000 that they could split. But what happens is we don't care what the value of the house is if we're going to sell it. It means that whatever value it sells for, less the debt, less the expenses, is the amount that we're going to put on this balance sheet. Okay. So for the most part, and that we're not going to keep this 50-50 for now. And yes, arbitrarily, we say for right now, what percentage goes to the wife? And you could certainly change that and say what percentage goes to their name or the husband. I have had people that have had some issue that it goes to the wife, but again, it's an arbitrary decision just to help balance out and to use this as a percentage. Now you're going to go through and look at the cars. And so a lot of times we could have, a brand new car and maybe there's some debt on it. And then somebody else could maybe have a fairly, I would say, cheaper car, if you will. But there is no particular, so in this particular situation, you would still have, typically you're going to keep one car, one person's going to keep, okay? And they might keep the debt on that car, and then the other person is going to keep the other car. So in these cases, you would see, and typically this is going to be in a car situation, that one person could have slightly more or less. So you can see that the person with the new car, because there's new car debt, the value of their car or the equity in the car is only $5,000 as opposed to the older car that has equity of $7,000. So in most cases, I think you're going to need to still look at the Blue Book value for car number 2, because again, we're saying that there's value to this car, but is this actually a tradable value? And is this car just too old? And should we put anything on there? The other area that we've kind of hidden is household goods. That is really an area that you have to see if there's any substantial household goods and then talk that through with your mediator. We're kind of just sticking to some of the basics and some of the easy pieces to walk you through. So then you're going to look at, checking accounts and saving accounts and try to, everybody list their checking, their savings, whether they're joint, whether they're separate, what the account number is. If you have several accounts at Bank of America, it's going to be important to put the last 4 digits of that account number so that you can identify it when you're putting together your divorce decree. Okay. So this huge agreement at the end that you would put together that is way more than this settlement offer would be where you would be talking about all of these accounts and the account numbers. So let's just make some numbers in here and see where we get to. You would also be providing statements for brokerage accounts, stocks, bonds, things like that. And there could be other pieces of separate assets. There could also be taxes. So a lot of times we might see that happen you would want to also look at the cash value of life insurance policies or annuities. For right now, we're going to hide some of these things because they're not exactly always relevant. Even the brokerage and stocks. The reality is right now, most of the people that we are seeing have very simple, if any equity, they will have some equity in their house. They will have some equity in their cars. But a lot of times people do not have substantial cash holdings, which means they might have some money in the bank. A lot of times they may have more money in like a retirement account. And then we have to determine what the pension value could be. So if we look at this, and we'll make this kind of even. So if we look at this, they have $250,000 in retirement assets and they have $250,000 in a Roth IRA. And one of the things you have to be mindful is this is a lot of personal financial information that you're working through either with a mediator, or if you're going through the court system, all of this is also available in the court system. So if you don't want everybody to know all of your business, it's really about working together or working with a mediator that does this more confidential financial offer and disclosure so that you can work through the system and not maybe give all of your financial documents into this public forum called the court, the family court. So in this particular situation, you have retirement assets and you have a Roth IRA. And so one of them is pre-tax and one of them is post-tax. So quite frankly, either you're splitting both of them. And again, anytime you're splitting something, you don't necessarily care about the value. You just care about how it is going to be split. Okay. So in some cases, you might have to pay for a quadro to a qualified domestic relations order, which will split some of your retirement. In some cases, you are requesting it through the company or the 401k, or sometimes you might say, well, I'll keep the 401k right at 250,000 and you keep the Roth IRA at 250. And what the mediator has to understand is this is actually post-tax. So this is worth more than the retirement assets. So there typically needs to be a tax calculation or at least an assumption of what that tax is going to be when those funds are going to be taken out. So that would be an estimate that you would need from some sort of expert. So if the house is being kept by somebody, we would probably have an expert provide a value. If the assets are going to be split in an uneven way, then we would probably look at somebody calculating what the value, the after-tax value of the retirement assets are as well. When you get into the business could potentially be the highest asset in this situation. And so what happens with a business, typically it's going to be held by one person. And so when we're looking at the business and we're not splitting it up, it's going to be pretty important about what number we put on that business. The other issue that we didn't quite totally talk about is this pension. And a pension value is typically a calculation of the present value of those future cash flows. So what does that mean? It means that some states don't agree that there should be a value to the pension, and other states agree that there is a value, but you need to provide an expert value for that piece. And it's usually a present value calculation. It's not really a difficult calculation, but you have to understand that the courts might be a little gray in this area, and this could be an area of a contention even with a couple. Again, the business is also going to be potentially an area of contention with the couple because you might not be splitting it 50-50. And so in one case where one person is going to keep that asset, and that is the greatest asset of the business or of the marriage, then you're going to have people wanting to argue that that is worth less. And I think that you have to look at a couple factors. You have to look at cash flow to the parties over time. So have they accumulated big items, like large houses, a lot of other expensive things? Does the cash flow to that business make sense? Is there any misleading information having to do with the income or expenses because this is a privately held company? So for the most part, mediators should always bring somebody in to value the business and should not ask the couple what they think the value is. Again, the person who owns the business probably wants to say it's a lower value, and the person who is not keeping the business probably wants a higher value. And some of the psychology around a business owner and their spouse is that they could spend years talking about how profitable and beneficial this business is. And yet when they're getting divorced, they're now uncovering the fact that maybe they were a little risky with the business and they have a lot of debt, or there was some gambling, or there was some mismanagement of the funds, or I didn't report all the income, or I reported expenses that are personal. Again, a lot of those things that may seem very fraudulent or tax evasion and things like that are not beneficial to the couple. And so what we're looking at is what is the reasonable um, cash flow to the business and what is the risk that that cash flow continues. And so sometimes the risk of that cash flow is going to be inherent in the person that stays with the business. And that could also be called personal goodwill in some situations. And it could also have a piece of it that is not divisible in court. So, for example, some states have ways that you need to value a doctor or lawyer or somebody who has a professional practice. And so, a valuator is coming in and providing you with knowledge about the settlement offer. They just need to be able to provide you with a range of value or work with the couple to understand the value. And so that's where we would come in and provide this service to the mediator and allow them to have a verifiable value that you work with a couple together. Now, in this particular situation, there could be some credit card debt or there could be some personal loans. So sometimes there could be a very large personal loan on the business. And so typically we would see the business would have the loan on their books, but if they don't, then we would need to add it to the outside. A lot of times somebody will have a business, but they may have a building that they bought for the business and they operate it either through their own personal tax return or through its own entity, its own LLC that holds that building. So in those cases, we're just making sure that we quantify every account. So anything that exists needs to be put on the spreadsheet. And it is of both people's best interest to declare and to give the information for all of these assets. It's really required by the court system. And when you're filing financial disclosures, you are committing that you own these assets and that under penalty of perjury or lying to the court, that you are disclosing everything. And so in mediation, we're really working and saying, okay, I thought we had this account here. Where did it go? Well, I thought we had money here. Where did it go? And so if accounts were closed or transferred, it's going to be beneficial for that person to either tell everybody what happened or to show the statements so that everybody can take a look, make the assessment. You know, sometimes there's a concept called marital waste, and everybody gets very concerned about money spent on other things or things that were not disclosed. So this could be an issue. And again, the business valuation person would handle all of those issues within this business valuation. Sometimes we also present a one-page that would give them the knowledge of the valuation and then use it either with their mediator or to provide to the court or to the other opposing party. So in this particular situation, when it comes right down to it, we have $1.4 million worth of assets. And for the most part, we're trying to even them up. Okay, so you can call, if you can determine whether you are in a community property state or an equitable distribution state. But in general, most of our mediation processes are looking at a somewhat even split of the assets, but what we're doing is trying to put them into two different buckets. Okay. So it's not about splitting everything 50-50. It's about putting them in buckets. So now we can see all of the values. And that's why I would negotiate each value separately. That each of you talk about this and really come to a rational agreement on each line item, as opposed to what I normally see, which is everybody now looking at the total and saying, okay, I want to manipulate the values in order to get what I want and not give up things that I don't want, right? So anyway, you get the point. So now we have to go back and say, you know what? I think that one person might stay in the house and maybe it's the wife. And they'll each keep their own cars. They'll split the checking, savings, CD. Let's say for the moment, they're also going to split the retirement assets. So we don't need to calculate that. One person is going to keep the business, which is going to be the other spouse in this particular situation. And now we have to deal with the credit card debt. So the credit card debt might be 50-50, or it could be on one party or another. Again, you would have talked through each of these items and not move forward until you got through that item. Or else people are just going to kind of position and manipulate as they go through this process. So be mindful, if that's what happens, that you're listening to make sure that the person's giving you facts as opposed to and backing it up with statements and information that is beneficial to help you understand their position on that value. Okay. If they have separate assets, they should be able to prove it out and provide you with some of that information. So in this particular situation, this is an asset that is connected to the business. And so we're going to also put that in the business. So what we come to the bottom is basically of this 1.4, if we go through and allocate the assets in the way that everybody would normally keep them, we have a situation that one spouse is going to need to pay the other spouse about $300,000 in order to have these buckets be even. So one of the things that we could easily do, because the Roth IRA is after tax, you could easily take all of the Roth IRA and that would even up some of this issue. The other situation that you could do is that you can see that we're still about $176,000 off. So the only other way to deal with this is to also give the person all of the retirement assets. So now we still have this bucket is not equal. We still have 51,000 that needs to be transferred over in some capacity. So it could mean that one person keeps the debt on the house and then that person needs to pay off some portion of the house. Okay. So we would need to make sure that the person who keeps the house could refinance this mortgage. We need to make sure that somehow this portion is going to be paid off in some capacity. And then we get them to an even amount. What if that is not possible and the person doesn't have any more cash to provide to pay off? This 51,000 could be as a payment over time as a property distribution, and we would determine what that payment amount would be. So sometimes a party could have bonuses or something like that where there would be an influx of money and they could pay that off at that time or over a 2-year process. So we're looking at what are the sticking points of this issue. A lot of times a retirement asset, somebody's not going to want to give away all of the retirement asset. So that might not be a reasonable position to take. In some situations, then we might have a $176,000 payout, and we would really need to determine what that looks like. Now, in a situation where you're not getting maintenance or you're not calculating child support or maintenance, this would look like a monthly payout over time, and we would get an additional life insurance policy to support a $176,000 payout in case anything happened to that party that's paying it out. So this would be a standard way to go through this settlement. And if we get to that portion, we might say, these are some of the footnotes that we provide on the settlement offer. And it would just enunciate some of the issues, like if you believe that the house is worth, between $250,000 and $350,000, we get an appraisal or we will get a real estate appraisal if you'd like to keep it. If you agree to our numbers or would like to sell, there's no need for an appraisal. Again, we talked about that. If we're going to sell it, we might not need to get an appraisal. And if that would really be based on neither party could stay in the house or neither party wants the house. But you can't force one party to keep the house and one party to vacate. It would really be a discussion. It could be that you provide a summary of a realtor's assessment of the house, a price for listing, or you provide an appraisal for the price if you want to keep the house. You could also provide a mortgage analysis report to show the terms or if there's alimony needed to refinance this house within the next 6 or 12 months. You could also provide a preliminary business valuation. And a lot of times what we're doing in these situations is when we're presenting our valuation to the parties, if all of their people aren't there, maybe they're going to hire an attorney in the future. A lot of times we're asking the parties if they want to record our presentation of the valuation, and then we're providing them with a 30-minute summary, basically of the valuation report that we go through with them, that they can use and review in the future if they don't quite understand everything, or they can provide it to their attorneys, or they could provide it to their mediator. And so this is really a situation where if they both agree to this, this is going to be part of the negotiations for settlement and would not necessarily be discoverable outside of these settlement discussions. So this is really a preliminary business valuation. So this would be a settlement spreadsheet that is created with other licensed members that are part of our mediator circle. Or in this particular situation, this is how I would present this process. We usually will then, when we're hired by somebody to go through, or a couple to go through, we're working them through this property statement and all of the assumptions, and then eventually putting it into a written format so it can be a full divorce decree. And this is just the beginnings of working together. Or if you really wanted to come up with your own settlement offer, you would put this together, provide it to your spouse, and work through your attorney. The fact of the matter is, most people are going through mediation for some part of their divorce. And if you're going through mediation, I would advise you have this settlement spreadsheet ready and available before you go into mediation. Like, you're basically coming in with an offer. And then when you come into mediation, they're just going to the other side and saying, what is your issue with this offer? How can we come to an agreement? And you've set the foundation for a very productive mediation if you are in litigation. So this could be used at any time when you're in the process if you want to come to a settlement offer. Unfortunately, sometimes people delay and wait too long in the process to start it, but it can be started at any time. Our suggestion is to use it as an initial settlement offer before you file. And if worst case, you cannot negotiate it with yourselves or with a mediator, and you need to hire attorneys, you provide this settlement offer to your attorney. They can then develop the financial disclosure, file it in your state, and work forward in championing this offer to the other side throughout the process. It will help you save time, effort, and money. If you have additional questions, we have a lot more training and offers on the Divorce Allies, as well as settlement.com or Valuation Mediation. If you have any questions, you can book a 90-minute session with any of our providers and start to walk through this disclosure. We also have capability for you to just download the spreadsheets and get started on your own. You can take control of your divorce, and the power is really behind this settlement offer. And so if you have any questions, please reach out to us, and we will be available for future trainings about how to go through some of the more complicated issues of the property statement. Thank you so much. My name is Melissa Gragg. Again, valuationmediation.com, and I am a financial mediator with business valuation testimony experience.